What's up YouTube? I'm Charmaine Jamil and welcome to this week's video. So this week I really wanted to get candid about the biggest money mistakes I have made thus far. Honestly, when I turned 40, it really hit me, oh my goodness, this life thing is real. Now don't ask me why did it take you until you got to 40 years old to really realize that. Child, I don't know, it just clicked for me. That's just when my light bulb went out. It really made me think, hey, you're going to be old and gray and not have as much energy as you did even 10 years ago, let alone 20 years ago. So you really have to be very adamant about the plan that you have for yourself to make sure that you are living a good, comfortable life in your retirement years. It really got me to thinking about my finances. Now, I have been looking at a lot of different financial videos lately, whether that's on YouTube, certain podcasts, hell, even TikTok has some really good videos of people really kind of giving you financial advice. And I've kind of thought about all of that information that they've said and kind of taken into account to really create this video as accountability for myself. Now, I am not a financial advisor. I am just being transparent about my current situation. Take what you can, use what you can, throw out anything that doesn't make sense to you. The point of this is really for me to encourage myself, to encourage you as well, to really just take responsibility for future you. And so without further ado, let's go ahead and jump into the video. So I really wanted to share these 3 big money mistakes that I have made and how I'm correcting them moving forward in life. So my first financial mistake that I have made is one, not really acclimating myself to the truth of what my financial story really tells. Because if I really had to describe my financial trauma, as they say, what is the picture of how you learned about money or your idea of what you thought money was? If I had to describe it in one word, girl, it would be delusion. I was delusional about money because I don't know why I just wasn't making the connection that, oh, don't worry about it. You'll, get it back. You'll get a new job. You'll, have this new stream of income. But if you're not really making a plan of having new streams of income, increasing your salary every year, that delusion can really put you in a place of debt. My second big money mistake is really not fully understanding what my banking products actually do, what they can do for me, and if there is a better option for that same banking product that maybe another financial institution has. And my third money mistake that I've made is really not having a plan when I get these large lump sums of money in my life. So when I'm talking about acclimating myself to my financial story, I'm really thinking and having to be honest that, quite frankly, I did not pick a profession that is a high earning profession. So I'm in the field of education. I'm not necessarily like a classroom teacher anymore, but I am still in the field of education where salaries are very moderate. Now, you will get a reliable paycheck, some reliable insurance, a reliable retirement plan, but there is a cap on certain jobs for the salaries. Now, I do have the option to go into a certain category within my field, such as becoming a superintendent of schools or a principal of schools, something along those lines of giving me an opportunity to have a higher salary. There are some superintendents of schools for K-12 public education that are making up into the $300,000 range, and that's great. But one thing that I had to really understand and weigh out for myself is the stress. And so I shared in another one of my YouTube videos whether it was worth me getting a Doctor of Education degree. And honestly, that is the main reason I went back to school to get a Doctor of Education degree, because I really wanted to be a superintendent and be on the higher end of a salary. But once I finished and really started understanding what the job responsibilities were of a school superintendent, I was like, man, those people are stressed. Is that something that you really want to do, Charmaine? And so I had to acclimate myself to what my financial story, what my financial state was, because it definitely was not based on some $300,000 salary. Now, I do understand the meaning of just because you make six figures does not necessarily mean that you are not living below or above the poverty line, or that you will not be paycheck to paycheck. Because I can sit here and tell the truth and say, yes, by numbers, I do make a six-figure salary. However, I still am trying to figure out, okay, do I still need Geico, or do I need to switch over to State Farm, because that's going to reduce my car insurance by $50 a month. I am a single household salary, so my six-figure salary does not go as far as two people in a household that may be making a six-figure salary. So I had to acclimate myself to the truth that just because you make a six-figure salary, it does not mean that you were just balling and shot calling. I also had to understand the weights of, do you want to take this salary that you have and live in a small town where your money is able to go further? Or do you want to take your salary and move to Atlanta? One thing that I sometimes often think, did I make the right decision, was back in 2022 when I sold my house. Now, when I originally bought my house, it was in the year of 2009 where the economy was really not doing great, and it was definitely a buyer's market. They were actually giving money to people to buy homes. And so I ended up, because I was like this first year teacher, I ended up buying this starter home. Well, when I bought the starter home, and my mortgage in 2022 was $636. Now, had I kept that house and still lived in that house, the salary that I have now, I probably would, be doing something else, because my money would have gone further, but I definitely wanted to live in a different zip code. I ended up selling this house, and I ended up getting a profit of $63,000. Now, that might seem like a lot of money to you, because guess what? It's a lot of money to me. But one of the many money mistakes that I did make is not having a plan for lump sums of money. So, like I said, when I bought my house back in 2009, they had a $10,000 tax credit where you could get $10,000 because you were a first-time home buyer. Now, instead of me taking that $10,000 or really having a plan for this lump sum of $10,000 that they had put in my hands, I was like, oh, well, let me go buy a refrigerator. It's okay if I buy a new pair of shoes here and there. And by the time I knew it, I had spent the entire $10,000 without actually putting it into some type of account or an emergency fund, because after all, that was my first time buying a home. I really didn't know the expectations and the responsibilities of what it meant to keep your yard maintained, what it meant if your refrigerator went out, what did it mean if your air conditioning unit went out. I had absolutely no clue. So as time went on and I started to notice these things like yard maintenance and, all pest control, those type of things that are the responsibility of a homeowner, I was like, well, where am I supposed to get all this money from to pay this? And it was just like, well, remember that $10,000 you had? If you had put it away in an emergency fund or had a plan for that lump sum of money, some things might have been different for you back in 2009, 2010. So that is one money mistake that I know for a fact now that I do not take lightly. Anytime I get a lump sum of money, I always try to make sure that I have a plan for it. So when I sold my house and I got this big $63,000 check, I was like, oh my gosh, what should I do with it? And I'm not gonna say it was like money burning in my pocket, but I knew there was a great possibility that if I didn't have a plan for it, that I would do the exact same thing that I did back in 2009 and just spend that, okay? What I ended up doing, I thought about, well, what are the bills that I have? Because I knew I didn't necessarily want to pay off like my credit card debt, because I knew if I was not disciplined enough to really remove credit cards out of my daily spending, I could pay off this debt. And honestly, there was a great chance that I would get into credit card debt again. So I decided not to pay off my credit card debt and just stick to the plan that I had to pay off my credit card debt because I could appreciate it just a little bit more. But what I did end up doing was paying off my car payment because I had a car payment that was $635. And I knew if I had paid off my car, that would give me $635 back into my monthly expenses where I could make a better plan and use for that money. So once I did that, then I took that money and put it into a certificate of deposit, which is a CD. Now, this kind of leads me into another big money mistake that I mentioned, and that was really fully understanding the banking products that your bank offers you and what bank is offering what. So when I got this $63,000 from my home sale, I ended up opening a money market account first, where I let the money sit in the money market account because I just wasn't sure at first before I put it into this CD if I needed to have access to this money. Well, because I was banking with smaller credit unions that really were giving me great interest rates on like my car loan or even like my mortgage at the time, certain things, I just continued to go with the banking products that they had. Well, if you really take the time to do some research, you'll know that there are certain banks that offer a different annual percentage yield on certain products like high yield savings account or certificate of deposits. Now, when I was allowing my money to sit in this money market account, I was only getting a return of like 1.6% versus when I did research and looked at another bank, they were giving me a 4.3% rate on maybe a certificate of deposit or 3% on a high yield savings account, which kind of acts in a similar way because my idea was, well, if I need access to it, I really should have been paying attention to the APY that that banking product offered so that I could earn more interest on the money that I was allowing to sit in their banking institutions. And that's one thing that I just didn't fully understand until it came time where, you're supposed to be making sure you have all of the right accounts, the checking account, the savings account, the high yield savings account, your Roth IRA. And so I was like, you know what? I'm adulting and I'm going to open a Roth IRA. Now, granted, I told you I was in the field of education, so I did have a steady plan of retirement. They were taking Social Security out of my check every month. They were taking retirement out of my check every month. So by my employer, yes. Did I have a retirement financial plan? Yes, I did. However, I don't recommend, or it was recommended to me, not to solely lean and rely on just your employer retirement plan. So at the time, I was like, oh, baby, I'm going to open a Roth IRA and I'm adulting. Well, it really pays to fully understand what those products mean. So again, I'm at my small credit union and they offer me what they call an easy Roth IRA. You only needed $50 to open and you can contribute the money. And I knew what the actual limit was at the time, which I think it was $6,000 at the time versus $7,500 of what the max you could contribute to your Roth IRA. Now, granted, I wasn't upset because I knew I wasn't maxing out contributing to my Roth IRA. But the point that I'm trying to make to you is that you see there that it says, I saw with my own eyes, and I still see it because I still have this account, it says Roth. But the difference is that is not a Roth IRA that you contribute to that is connected to the stock market. This says Roth, but it technically is a certificate of deposit. Now you see there that that certificate of deposit that I have is giving me an annual percentage yield of 3.6 versus an IRA that's connected to the stock market as far as an investment is concerned would give a much higher percentage rate, closer to 7-8%. And that yields very different dollar amounts. Well, it didn't dawn on me that I didn't truly have a real Roth IRA until I was looking at this podcast on YouTube, and the lady was trying to make sure that people understood you contribute to this Roth IRA. However, when you contribute to that Roth IRA, you have to go into that account and select the stock tickers that you want to purchase. Now, I knew I had a brokerage account where I was trying to dip my toes into investing and really understanding what it meant to invest into the stock market. So I knew I had a brokerage account where I was putting money in there and buying certain shares of stocks. And when she said that, it clicked. I said, Charmaine, you don't have a real Roth IRA because you're not taking your Roth IRA money and actually going and buying stocks and shares with that money. And I'm not even going to say how hurt or how stupid I felt. I just didn't know. I really just didn't know, because at this small credit union, I just saw the term in the banking product that they offered where it said Roth, but it truly was not a Roth IRA that I thought I was investing in the stock market. So it's very, very crucial that you truly understand what your banking products are offering you. Honestly, after that realization that I did not have a real Roth IRA, then I started kind of looking at other ways that I was really kind of losing out on my money optimizing for me. And so one way I knew that my money was not optimizing for me is because my savings account rate at that small credit union versus a high yield savings account rate of 3% or 3.2% that a lot of banks like American Express or Marcus by Goldman Sachs, a lot of what those are offering versus your 0.1% or 0.2% that some credit unions are offering on your checking and or on your savings. And so that's when I really started understanding, okay, you can keep your small credit union, Charmaine, if it's important to you to have a location where you can go in, cash a check, or where you can actually talk to someone walking into a banking location versus having a bank that is totally and 100% online, because it does make a difference to certain people. But at this particular time, I'm all about optimization. So online banking 100% does not bother me. So there really is a point where you really have to do your research and know what is comfortable for you in your everyday life. But that's when I started realizing I was really losing out, not allowing, when I got these large lump sums of money, putting them in a money market versus putting it in a high yield CD that had an even higher interest rate, especially if I was not trying to access the money within 10 to 18 months. And so one thing that I have definitely learned since my father's passing, now I've shared this in a couple of videos. My father recently passed away about a month ago, and one thing that has helped me with my financial situation was having life insurance on myself as well as my parents. Now, I paid into this life insurance, and when my father passed away, I was the beneficiary of the insurance policies because that's what I had set out for myself, because I was the owner of the policies, which meant I was responsible for paying them. Now, I owe my dad everything. My dad left me in a great situation. Honestly, when I started thinking about this video, I could almost hear him saying, all right, I did what I was supposed to do. Now you got to do what you're supposed to do for this lump sum of money that you have. And so the first thing I did, I said, I don't want to touch this money. It's okay if I don't touch this money for a year and a half. So I ended up opening a new certificate of deposit where I'm earning a little bit more interest. Now, I've tried to kind of think about how I can finagle and really allow this money to optimize for me, because back to the Roth IRA, where I really wasn't maxing out my Roth IRA with $7,500 every single year, I thought to myself, if I put this money into this certificate, because of the amount of money that it is supposed to yield me $6,300 in 18 months. And I thought, okay, if you're gonna yield $6,300 of interest earned on this money, you technically can take that money, add it to your Roth IRA, and pay the difference of what it would mean from $6,300 to $7,500, so that you're able to build a strategy of maxing out your Roth IRA so that you have the maximum amount of money of what you could be contributing to a Roth IRA for your retirement starting now for the next 25 years. So that's one strategy that I've thought about putting in place, because I have learned if you don't have a plan for a large lump sum of money, that money can go just as quick as it came. Another thing that I feel was a really big money mistake for me, kind of going back to the yearly salary discussion. I really thought, like, Charmaine, you're not really optimizing the opportunity to move into a higher paying position where you're able to set more money aside to put into these accounts. Because it's one thing to open all of these accounts, whether it's high yield checking or the certificate of deposit, but you need money to deposit and transfer into those accounts. And so although I am still trying to figure out, okay, how can you optimize for a higher salary, I have opted to have more income streams or separate income streams. This really hit me when I struck up, well, technically he struck up a conversation with me, but it just got interesting. But it was this young guy. He was about maybe 23, 24. I think he just thought I was like this young girl. I don't know, that's my skincare routine. But he just thought I was this young girl. He was just trying to strike up a conversation. I mean, I knew what he was doing, but it was like, it doesn't hurt you to speak back to people. He was like, you know, well, what do you do for a living? And so I told him. And once I said, oh, I'm in education, his first response was, that's it? Like, you don't got no other hustles? You don't do, you know, X, Y, and Z? Then he was like, well, I'm a personal trainer. I'm a notary. I drive Uber. And he just started naming off like 5 hustles he was doing. And I thought in my head, you know, like, that's a difference in culture, how society is now versus how society was, you know, when I was growing up. But it just was so interesting to me, because I thought, well, Charmaine, I guess you could have some extra side hustles, but I don't want to do anything that is strenuous or that I have to put that much energy of saying I'm a personal trainer, I do Uber and all of that. Because if that's for you, that's for you. I wanted something that I could do remotely. I became a Poshmark seller, where I basically recycle my closet. Things that I don't want, I sell them on Poshmark. And I've been doing that for a while, where I've been able to kind of build up where I can at least sell something once a month or twice a month. Sometimes I'm like hot to trot, and then other times it's just really slow. Or finding jobs where I'm like offering tutoring services, where I'm able to make like an extra $1,000 a month. Because one thing about it, I love creating YouTube videos. I love doing all of the social media posts, but it takes money to do that. And if you haven't carved that out into your salaried money, then that is going to make a totally different month for you. There have been many a times over my lifetime where there has been more month than the money that was in my checking or savings account. But that's why I wanted to share this video and really talk about some of the big money mistakes that I have made, and really kind of coming full circle how I am course correcting a lot of those money mistakes that I have made. I have shared that I'm utilizing life insurance to really support me in a way that I just really kind of feel like sometimes life insurance, or the topic of life insurance, is a little taboo-ish. But when you have certain policies, there's a living benefit to those specific policies. And I've shared on another video that I took life insurance out on myself But the specific life insurance that I took out on myself was called a return on premium, meaning that I would pay this bill every month. It was a $100,000 policy. It was a 30-year premium, meaning if nothing happened to me or if I was still living at the end of the 30 years, I would be the beneficiary of the $100,000 versus if something did happen to me, whoever I had placed would be the beneficiary. However, there's a living benefit to that. So I am able to borrow against that $100,000 policy, meaning if I wanted to buy a home and needed a down payment that was, $18,000, I could borrow $18,000 against my $100,000 life insurance policy, still continue to pay that premium, because essentially I got that policy when I was like 27 years old. And so the premium is very low because I was younger when I took out the life insurance policy. And so the premium is really low. It's like $30, I think. That's really something to think about, that I'm paying a $30 premium. I'm 40 years old now. I'm paying a $30 premium based on when I was 27 years old. So when I really understood how life insurance could work for you in a living benefit as well as a death benefit, so it gives me access to cash that I may, access it, or I don't necessarily have to access it. The one thing about it is when I started to really acclimate myself to the truth of what my financial situation and story was, not the delusional stories that I used to tell myself. When I really started to understand you have options in your banking products. But for me right now, my goal is optimization. I'm looking for accounts that have the highest APY, that's going to give the highest interest on the money that I have right now. So I'm still trying to really figure out what it means to really invest heavily into the stock market by purchasing ETFs, simply because it's a lot more moderate, especially since I'm 40. I really want to make sure that I'm doing things that are comfortable for me, but also not ignoring certain options that are going to put me ahead, especially considering my age. So I really wanted to share those 3 big money mistakes that I have made. Really not acclimating myself to the truth of my true financial story, really not understanding what my banking products can do for me, and if there are better options, why am I not utilizing those? But also not having a plan for large sums of money when I come into contact with those. I have made really great strides to try to figure this out because, like anybody else, I really didn't understand what it may have meant to be 40 years old on a single household income, because I have learned that if you do not do it for yourself, no one else is going to do it for you. No one else is going to come and save you. It really has to be your sole responsibility. I really want to take into account, well, Charmaine, if that's the case, are you doing everything to take care of you? Are you doing everything to make sure that once you get to a certain age where you don't have all of this energy to spend, are you going to be okay with the money that you have set aside for yourself? So that's why my goal at this time is really understanding how can I get into certain things where my money is optimized for me. I really hope that you enjoyed this video. Please drop down in the comments, what is some of the best financial advice that you received? It might just help someone. Hell, let it help me. But I really want to hear from you in the comments. Thank you all so much for tuning in. Please don't forget to like, comment, and subscribe, and I will see you all next time. Peace.